Hello and welcome to Hedgeye NexGen, where we're going to help teach you the basics of finance and teach you how to build wealth over time. I'm Ryan Ricci, and as always, I'm joined by Ish.
Thanks for having me.
Of course, welcome. So on this week's episode, we are going to learn how to become a millionaire, or we'll play a game called Who Wants to Be a Millionaire?
I do.
So basically, there's a study. It was done very recently. What it did was it interviewed 10,000 different millionaires, and it basically said, "How did you become a millionaire? What did you do to become a millionaire?" It goes through literally their entire life, and we're gonna just go over all the statistics so you can see literally what millionaires are doing versus what you're doing and everyday Americans are doing. So
10,000 millionaires, that's 10 billion worth of wisdom for us today, right? Let's hear it.
well, actually, on average, they had about 2.5 million. So
Oh, okay.
over
25?
25 million?
10,000, yeah.
There we go.
25 billion.
Also, this is in terms of net worth, so not gross worth. So this is net worth. So your net worth had to be over $1 million to get into this study.
Okay.
So that means it's all your assets minus your debt. So these people, it's not just like a gross debt person.
Right.
It's net worth. So we'll go. Well, we have slides, so I'll say slides, but we'll read. There's just statistics. So we'll go to the first one. So 8 out of 10. So 80% of millionaires invested in their company's 401k. So
That sounds like a giveaway there, right there. 80%, like
basically
sounds like a must.
Yeah, pretty much a must. They're invested in their company's 401k. And if we go to the next slide, 3 out of 4 or 75% of them invest outside of companies' plans. So they're invested.
Mm-hmm. Okay, yeah.
So I think that's the best way to put this. They're either in their 401k or they have the 401k and another types of investment. But either way, they are invested one way or another.
And this suggests some overlap, right? Like they're invested in both 401k and outside of companies.
I would assume so, that there was a decent amount of overlap where they had probably both.
So that means like they're very invested then.
Exactly. They are invested. Okay. This next one is going to probably surprise most of you. 0 of the 10,000 millionaires said that single stock investing was a big factor in their financial success. 0 of 10,000. So what does that mean? That basically means like they didn't say like, oh, I am a millionaire because of Apple and I invested in Apple, or I'm a millionaire because I invested in Microsoft. None of them said that. Single stocks didn't even make the top 3 list of factors for them reaching their net worth.
That is definitely going to shock a lot of people, I think, because everyone wants like the stock pick, and they want to get rich off the one thing.
And based on this study, they basically say that doesn't matter.
Yeah.
The single stock level, they're invested.
Right.
100% they are invested, but the single stock picking doesn't matter.
Right. Now, they may have had one stock that did this, but then another stock that did this. The point was it was never just one.
Exactly.
There's no ticket to the million.
Yeah, maybe they had a portfolio of 10 different single stocks, and that portfolio of 10 single stocks over time became a lot larger.
Yeah.
It's much more of like an index fund, like they're making an index fund of 10 stocks, or they're just invested in a mutual. Really, what they're invested in was mutual funds. It was high dividend paying stocks.
Yep.
And real estate.
Yeah.
So
makes
it's
sense.
essentially, and almost all of them, they basically said that they spent very little time on determining the single stock and managing their stock portfolios. It was very little amount of their time. And they also were saying in the study that it really didn't, and what they found was that like the people they were in like the top 20% of mutual funds or ETFs, so basically like the S&P 500, but it wasn't like they were in the top 1% of ETFs or mutual funds, right? It was basically they're in stocks, right? And they're just in a broad-based stock portfolio is essentially what they were in.
Right. So it's the portfolio that helped them become a millionaire, not one piece of the portfolio.
Exactly. And they didn't really spend that much time on which is the best portfolio. Like, this portfolio was the number one last year. I need to get my butt into that portfolio. They didn't care.
It's just about being invested and probably some other things that we'll get into, I'm sure.
Yeah. So we'll go to the next stat. So 3 out of 4, or 75%, said that consistent investing over a long period of time was the reason for their success.
Yeah.
So
time in the market.
Exactly. Everything.
Not timing the market, time in the market.
It's literally time, right? And consistent investing. So every month you get a paycheck, portion of that's going right towards their investments. And it's the discipline of consistently putting your money into the stock market that it will not guarantee you, but will make you the millionaire. It's not where am I putting the money? It's am I getting a paycheck and consistently putting it in, and then over time, they became a millionaire.
As long as you put it in the market, right, that's better than not putting it in the market by a long shot. Because, it's much better than squandering it away on whatever you want today. If you save it for the long run, then.
Exactly. And that's what they were doing. Some of them did real estate too. So market, real estate, those two things were the ones where they were. So, very interesting. Not at all what people want to hear. Everybody wants to say, find that one thing. Right. Literally not it.
What's the next Apple or Amazon?
Yeah, exactly. Everybody wants to know the next Apple or Amazon. All these people would say, who cares? I have my income. I'm putting it into the market. And I'm going to be just fine. Here's the next one. We'll say, so we'll see. So we have a chart here. It shows essentially the percentage of income saved per month. So the highest percentage, so 30% of people saved over 20% of their income. Okay, another 18% saved between 16 to 20% of their income. 23% of them saved 11 to 15% of their income. 18% of people saved between 6 and 10% of their income. 8% of them, or let's just do 11% of them saved less than 5% of their income. So the big thing there is 71% of the people saved more than 10% of their income.
You got to save it. So do you know, I don't know if you know for sure, is this saving income like you save it in your bank account or investing?
It's
certainly not spending, but
it's net of expenses.
Net of expenses.
So you get let's just say it's 20% of your income. So it's basically into investments, which is cash equivalents, a house, or an investment account.
Okay, so I guess it's anything they held on to minus expenses.
Exactly.
And they may have kept in a bank account. They may have put it into real estate or something.
Yes.
Okay.
Exactly. So basically, your expense line. So whether that's rent, let's go through like your rent, your transportation, your food, your health care, your entertainment, your education, clothing. All of that, all those expenses were less than 80%.
What they saved,
right? So it was 80% of their income went towards stuff like that, and the other 20% just went away. It went into an account somewhere to grow.
Okay.
Right. So but very consistently, right? 71% of them saved more than 10% of their income.
Yeah, you can clearly see the skew of the chart there, right? It leans towards more of the millionaires saved more of their money.
Exactly. So it's basically you have an income. The way you're going to become a millionaire isn't, again, it's not by getting the single stock. It's literally by who's saving the most of their income. So like you can like go throughout your office. What percentage are you saving on your income? The person that says the highest percentage, they're probably going to be a millionaire.
Right, and that goes to what you said, discipline. Biggest factor.
Exactly, the biggest factor. If we go to the next one, so they said that they worked, saved, and invested for an average of 28 years before becoming a millionaire, and most reached the millionaire milestone by the age of 49.
That reminds me of one of the episodes we did where you were showing when people hit the millionaire benchmark. It's always much later than.
Exactly. And then once you become the millionaire, then that's where you start to become the multi-millionaires, because the money makes money.
Yeah.
Right. But in order to hit that mark, it's 28 years into the future. Right. Mm-hmm. Again, they're not. It's not like a young 35-year-old or something that's the millionaires. Mm-hmm. It's literally the exact opposite. You're 49. You've been working for a long time. You've been investing, putting your money away. And then eventually you hit that mark.
Yeah, it just goes to show how important time in the market is. Like, that is empirical proof of it.
Yeah, it's everything we've been saying about compounding and the importance of compounding.
Yeah.
Right? They're literally just compounding is their biggest friend. They've determined that, and that's how they did it. Mm-hmm. You literally just need the time of compounding to do this.
The compounding is going to make you a millionaire, not the single stock.
Not the single stock. Yeah. Yeah, exactly. If we go to the next slide here, this does the age distribution of millionaires. So 21% of the millionaires are over 75. 28% of the millionaires are between the age of 65 to 74. 25% of the millionaires are between the age of 55 to 64. 20% are between the age of 45 to 54. 5% are between the age of 35 to 44. And 2% are between the age of 25 to 34, and 0% are under 25.
So a pretty insignificant portion below 40.
Sure. Below 44.
Yeah.
So that is 9%, only 9% of the millionaires, 9% mm-hmm. are below the age of 44.
Yeah. Those are the shooting stars right there. But,
yeah.
You know.
But that's not the majority of
it's not something
people.
You can just count on. So.
I think that's the biggest one, because like if you look at all these like shows and reality TV shows, it's always like they show the young person that's a millionaire.
That is really true. Yeah.
And it's literally just not the reality.
Social media.
Yeah, social media has completely skewed what the reality really is, and it always shows, right? It's always that young person that looks like 35, 30 years old.
In their 20s even. It's like, life as a 25-year-old running my own business, and they have a nice car.
Yeah.
What do you think the impact of that is? Do you have any thoughts on that?
Oh, I think it has a massive impact, and it's a negative impact. Because I think everybody's trying to chase it, and they think that, like, they have to, like, get to that. Or, like, they're behind. And and then they start chasing, and then they make really bad decisions because they're chasing, and then they like lose a good amount because they're just chasing, taking away they're not following the right formula.
Yeah,
the formula isn't whatever they did. Whatever that person did, like, good for them, okay, but that is not the reality. So I think it just makes this impossible standard that doesn't exist. It makes you feel bad about where you are, and it's just not the reality.
Yeah, sounds about right.
I think it's a really bad negative impact.
It's misguiding people. Right?
Exactly.
It tells them, like, hey, you got to be a millionaire by 20-something years old. It tells you that you even can, when in reality it's 9% of people who even are.
Yeah. Only 2% are between the age of 25 and 34.
2%.
Literally 2%. But that's the thing. Like, you hear about that 2% because, like, it's rare, right?
You hear about the 2% 98% of the time.
Exactly. And you're not hearing about the other 93% of people that were at least 45 before they became a millionaire. You hear about those people about 0% of the time.
Yeah.
So, yeah, I think it's really, really bad, actually, because it's just unachievable. It's not an unachievable goal, but it's just not.
It's just not the best advice for everyone, but that's what's being pushed on social media, unfortunately.
Yeah. So don't follow social media, guys.
Watch NexGen.
Watch NexGen. We'll get you there. Watch compounding, and I'll get you there really big. Let's go to the next slide here. So this is the age when participants became a millionaire. So it's going to be no shock. So only 7% of people became a millionaire between the age of 18 to 34. 21% became a millionaire between the age of 35 and 44. 37%, the most amount, became a millionaire between the age of 45 to 54. 26% became a millionaire between the age of 55 to 64. And 9% became a millionaire 65 when they were 65 and up. Again, the biggest part when these people are becoming millionaires are in that 45 to 54 age range, basically. Like
same thing.
It's an older person that's grinded their entire life, and now all of a sudden, like their investments they're compounding, they're doing their job, and now they're a millionaire.
The millionaires are going to be the people who had time and compounding on their side. That's clearly what the data is showing.
Yep. And constantly.
Yep.
And then if we do the next one, this is the next important part. So so compounding is a major aspect. The second major aspect is this: 94% of them live on less than they make.
That's a huge percentage.
Yeah.
Like that is.
They are not. Well, we'll get into stats on this. They're not the people driving Porsches. Like, the people driving Porsches are probably broke.
Yeah, and it goes right back to the social media thing. That's what they're showing you, the people driving Porsches.
Exactly. And those people are probably the broke people.
Yeah. I mean, to drive a Porsche or whatever, like, you got to make a lot of money. And that's like, that's less and less people.
Yeah.
So the reality is the people you're seeing are probably not necessarily living below their means. And therefore, they're not going to keep their money.
Exactly. Yeah. Right. All their money's going towards like a status symbol instead of their money going towards an investment account. You can't see an investment account in real life. Like, clothing is not an investment account, right? Your investment account is like on this computer screen behind closed doors. That's where it is. And that's where the wealth is.
I guess that hurts some people. They want to show it.
They want to show it so bad. So bad. That's all. I mean, that's also social media. All those people, social media wants to show it. They want to be in your face. Problem is, probably most of the social media people are probably also broke, and they're just living. Yeah. They might have gross millionaire, but they're probably riddled with debt, and they're not a net millionaire, right?
Yeah,
so they owe everybody else.
They're not going to be millionaires for much longer if they keep it up.
Exactly. It'll be like a short-lived life, or a short-lived millionaire life. But yeah, 94% of them live on less than they make. So again, so what does that mean? They're investing. That money is going towards investing. It is not going towards clothing. It's not going towards eating at the nicest restaurant. It's not going there. Like, their money is strictly on a budget, and it's just as much as they can save every month. That's what they're doing.
So the millionaires clearly want to stay millionaires. They want to, even though they've made it, they're still taking money and putting it back into savings or investments.
Yes. Yeah, and they continue to do that. They've done that since basically the age of 25 to, what was the average? I think it was 48.
Yeah.
Right? So from 25 to 48, that's what they were doing. And then when they're 48 to 75, they're doing the same thing.
Discipline.
It is 100% discipline. This one's pretty cool. So on the next slide, we actually looked at the study looked at, but you can find the study. It's called the National Study of Millionaires. So you can go online, look at the study. Should I say that at the beginning? Sorry, study. But it's also on the data source at the bottom. Anyway, millionaires, their residence. So basically, they looked at the square footage of a millionaire's house.
Yep.
What type of house are they living in? And so 27% of the millionaires are living in a house that is 0 to 2,000 square feet.
Interesting.
Which is
I can't really envision that. I don't have
a one-bedroom apartment is about 750 square feet. Okay. A two-bedroom apartment is probably 1,000 to like 1,300 square feet. So if 27% of them are living between 0 to 2,000 square feet, it's essentially it's basically an apartment, but it's a little bit bigger than a two-bedroom apartment.
Right.
It's not that big. It is like you can go on Zillow and look at like the 2,000 square feet houses. Like, they're not. It's not a mansion.
It's not 5,000 plus square feet.
No,
that was the
we'll get to that. Then the next one. So this is where most of the millionaires live. So 38% of them live in between a 2,000 to 3,000 square foot home. So what is that? That's it. That would probably be about a 3-bedroom house.
Like 2-story, 3-story.
It probably has 2 stories, but it's like the kids' bedrooms are not going to be like massive bedrooms. They're going to be pretty small.
Okay. So we're talking like a modest 2-story home.
It is a very modest 2-story home. Yeah. So what that just made up was, so those two, like basically I would call this modest living, is 65% of the millionaires are in a modest living
2/3 right there
situation.
In the modest. Okay.
Yep. And then the next one is 23% of them are in a 3,000 to 4,000 square foot home.
It's getting a little nicer now.
So that's a little bit nicer. That's kind of like a 4-bedroom household. Yep. Is that? So a little step above modest, okay? And that's the next 23% of people. So now that's 88% of them are basically in this like modest to like a step above modest.
Okay.
House. It's 88% of the people. Okay? Then the rest, so the next 12% are in the other categories. So the next 8% of people are between a 4,000 to 5,000 square foot home. That's a pretty big house. So that's 8% of millionaires, and 4% are in a above 5,000 square foot house.
That's just 5,000 to infinity.
To infinity. So those are probably, I'm gonna guess, like close. Let's just call it closer to the mansion status. So only 4% of them are in that mansion large house.
Mm-hmm. So what do you think this all says then? Like,
it's the exact opposite of what everybody thinks.
Yeah.
Everybody thinks all the millionaires are in those really nice houses. No, like the millionaires are like the ones living modestly. They are not in those mansions.
Yeah.
Like you see the nicest house on the block. That's not where I would go to find the millionaire. Like I would go somebody that's just
because the nicest house on the block might be someone who's a millionaire but isn't going to stay a millionaire.
And they could just be riddled in debt too. Yeah. Like it's just not the majority of them, right? You're gonna find some millionaires there and in those houses, have multiple houses, okay. But the majority of people, the 88% of them, are not in those biggest houses. Like there are literal millionaires, maybe next door to you, or like that's most likely where they're actually living. It's those people that are just living under their means,
right?
That are able to compound more of their money, and when they compound more of their money over a longer period of time,
it's more millions.
That's how the majority of millionaires became millionaires.
Yeah, and I think it again goes back to like what people are always chasing, especially these days with social media. Yeah. They're seeing the mansions and stuff, even though that's a very small portion of where millionaires are living. So then, let's say they actually get $1 million. Then they're going to go squander it away because they're trying to chase what they think should be the life of a millionaire.
Exactly.
Yeah.
Exactly. And the life of a millionaire is kind of like a...
It's a good life. It's not crazy, though. It shouldn't have to be crazy.
No, it's really not. This is my funnest one. So this is the top 20 brands of millionaires' cars. The number 1 brand is Toyota. The number 2 brand is Honda.
This is great. This is a great one.
Okay, so that's 30. So 16% of them drive a Toyota. 15% drive a Honda. So that is 33% of the millionaires are in a Toyota or a Honda.
Wow.
Which is a very affordable, not a crazy car. I mean, now only 7 of these brands are luxury brands, and if you combine all the shares of the 7 luxury brands, which we'll do is Lexus, BMW, Acura, Mercedes, Audi, Cadillac, and Volvo. I don't know if Volvo is luxury, but apparently it is.
I don't know.
It's okay. But that's 25%.
Okay.
So only 25% of the millionaires are in these luxury brands.
Yeah. 75%.
75% are in
cars.
Average cars.
The same cars we're driving, right?
Exactly, right? And it just continues to show it's that modest person.
Because as we talked about in the other episode, a car is like depreciating asset, so you got to tread lightly there.
Exactly, and the more expensive the car, the quicker it depreciates too. Mm-hmm. Like if you buy like a brand new Porsche, right, and that's I don't know let's just say brand new Porsche for $200,000. I don't know if that's how much they cost. I don't know much about Porsches, but they're expensive, right?
Yep.
And it depreciates by 40%, or let's say 50% in the first year. Mm-hmm. Okay, you just lost $100,000.
That's 10% of your million right there, you know?
That's literally what's happening. And then on top of that, you get a car loan, and then you're paying.
Then you're paying like double what the car is worth.
Exactly. That's a
whole other thing.
That's literally the millionaires are like, nope, somebody else can do it. It's like a fool's game almost.
Yeah.
The people buying those luxury cars.
Absolutely.
It's just not the way. But here, I'll go down the list here of the top. I'll do top 10 brands in order. Goes Toyota, Honda, Ford, then Lexus, Subaru, then BMW, Acura, Hyundai, Lincoln, Buick. And by the way, Buick is only 3% of the share. So it's, again, that's...
Yeah, I can see. Definitely an obvious skewing towards like the kind of normal cars, quote unquote.
Exactly. So. Exactly. Everything we've been trying to say. Here's the next stat. Yeah, by the way, everybody, this is just going to be a lot of stats because I love stats. Because you can't argue with
proof.
You can't argue with numbers.
No.
People lie. Numbers don't. Maybe that's why I like numbers more than people. I'm kidding. I love people. All right. Here's the next stat. 3 out of 4, so 75% of millionaires never carried a credit card balance in their life.
So that doesn't mean they didn't use a credit card, right? That means they didn't carry it over a month and pay the ridiculous 20% interest.
Exactly.
Yeah. Makes sense. I mean,
never. Like, never did they, never. 75% never had a credit card balance that went towards interest.
I would think that's obvious. Maybe not everyone thinks so. And I know some people have expenses, but you got to like do whatever you can to not carry it over because you're just giving away money at that point.
Right. And it's living in the means. Yeah. And then as the previous stats showed, they live under their means. So they're probably not even getting close to getting things onto that credit card.
Yeah. I mean, carrying your credit card balance is just like the epitome of a losing game.
Yes.
You're just 20% like gone.
Yes.
So
that brings me to the next one is, 46%, that's compared to the millionaires to the average person. 46% of the average American have credit card debt.
Wow.
So 75% of millionaires never had credit card debt. 46% of Americans today have credit card debt. Polar opposites.
Yeah, it really is.
It's the exact polar opposite. So an average credit card debt is about $272 a month for those 46% of Americans. And they're just paying interest.
That's unfortunate. It's unclear how much of that is like people who maybe just need it and they don't have enough income, or it's people who are just living above their means.
I think a majority of them are living above their means because we'll get into the jobs that millionaires have too.
Maybe that'll explain.
I think it'll explain a good amount, but it's a decent amount. Right? Again, millionaires aren't in big houses. They're not in big cars. They're in a
2,000-foot apartment with a Toyota.
With a Toyota.
That's what we've revealed.
Yes, exactly. So, and then if we go to the next slide, this is like debt percentages of the general population to millionaires. This was done, I think, in 2020 or 2023. So that's why the percentages for credit cards a little bit different, but it's okay. Same general idea here. So credit card debt, general population, this one is saying is 40% of Americans have credit card debt. Only 6% of millionaires have credit card debt. Staggering difference. Okay. Auto loans. The general population has 25% of them have car debt. I think it's probably way higher than that. Millionaires, only 18% of them have an auto loan.
Okay.
But maybe they have an auto loan, but they're not buying the luxury cars still.
Right. It evens out somewhere else.
Right. Here's the biggest one. Student loan debt. 22% of the general population has student loan debt. Only 2% of millionaires have student loan debt.
And that's probably not because millionaires didn't go to college.
No, we'll get to that stat. They go to college.
They go to college. They pay off the debt.
They pay it off
instantly. Prioritize it. Yeah.
They pay off that student loan debt almost instantly, right? So again, they're paying off that interest, or they're paying off the debt completely very early in their life. And what that affords them to do is it allows them to save more of their money. So now they're saving the money, and that money can go towards their investment account instead of paying off the interest of their student loan.
Yep.
So that's the biggest difference there. In terms of medical debt, 12% of the general population has medical debt. Only 2% of millionaires do. 8% of the general population has a family or friend loan. Only 1% of millionaires do.
That's interesting.
A lot of people are doing that. General population, 8% of them have past due utility bills. Only 1% of millionaires do. 4% of the general population has a cash advance. Yep. Only 1% of millionaires do. General population, only 2% of them have a business loan. Only 2% of millionaires have a business loan. Right in line with general population, but they're not really
doing anything crazy to start their business or whatever.
Nope.
Like taking 5x leverage or something.
No. Yeah. They basically, they probably don't, or they have like some leverage on the business, but it's nothing.
Only 2%.
It's only 2%, so it's not a lot. And then this is where the stats start to even out. So of the general population, 9% of them have a home equity loan. 10% of millionaires do. So both have home equity loans. Yep. And then the last one is the general population, 34% of them have a mortgage loan, and 30% of millionaires have a mortgage loan. So they're investing in real estate. They'll take out a mortgage, but they very clearly do not have student loan debt. They do not have credit card debt. They don't have medical debt. They don't have family friend loans. They pay their utilities on time.
Yeah.
And they have a lot less in auto loan. Not zero, but
less.
A lot less. But also on the auto loans, they're not buying a Porsche. They're not buying the most expensive cars. They're buying like a Toyota.
Yep.
And getting auto loan on that.
Toyotas and Fords, I think it was.
Yeah. Well, think about it. You get a Toyota, which is, let's say a new Toyota is $25,000, and you lose 50%. You lost $10,000.
Yeah. I mean.
Right. Versus the $100,000 you lost in a Porsche.
It's a much easier to swallow.
Right.
Out.
So that's what they're doing. I would personally say just get the auto loan out of there and just buy the car in cash, because that's even more what these millionaires are doing. Everything's cash. There are no monthly payments.
Yeah.
They just get away from it.
It's more compounding for you and not the bank.
Yeah. Yeah. And that seems to be what millionaires are doing. Let's go to restaurants. So millionaires spend about $200 or less each month at restaurants. And the next slide, the average American spends $328 a month in restaurants. Ooh. The average American is spending over $128 more than a millionaire at restaurants.
All right. So that's when I said the thing, like, I don't know if it's people who just don't have enough income or are living above their means. That partially answers it.
Yeah, well,
these people are spending more money at restaurants than millionaires are. They don't need to be doing that if they're not a millionaire.
Exactly. Right? Again, it goes towards it's like a social media thing. Like you would think, oh, in order to live this nice life, I need to go out to restaurants or whatever it is. Millionaires aren't going out to restaurants. They're literally making food in their house.
You can make a good meal at home, and you get to keep the money.
Dude, I got a nice cookbook, actually.
Oh, yeah?
Yeah, well...
Next episode, maybe.
Well, wait. This is a nice cookbook. I mean, we have started to look like chefs in our household. It is some good... it's like a chorizo, a lemon chorizo, or orzo. No, lemon orzo with chicken.
Dude, you're on your way to becoming a millionaire.
I am on my way to becoming a millionaire. It's so good. It's I love skillets, but they're impossible to clean. So that's kind of like.
I don't like skillets. It takes forever to heat up.
Well, I'm not. Well, see, once you get it heated up, it's all right. But then it's the cleaning process, because it has all the gunk in it.
It's just a mess.
It's a mess. My wife doesn't clean it for me. I gotta clean it. It's
well,
really
I guess that's why people go out.
Yeah.
And they spend too much money.
Dude. Oh. Yeah. Anyway, this one is funny. So, 93% of millionaires use coupons all or some of the time when shopping.
Wow.
They're still using coupons.
That's pretty shocking. That's one of the most shocking things here, I think. Because people I think a lot of people are afraid to use coupons because they're going to be embarrassed, right?
Yeah, maybe. Yeah.
Yeah.
But think about,
the millionaires are doing it.
They're literally going coupon. It all goes back. They are figuring out what their expenses are, and they're making their expenses as small as possible, so that they can put the money elsewhere.
Yeah.
And like the fact that they're using coupons, I don't know. People feel like coupons are dead, but apparently they are alive and well in the millionaire.
The millionaires are taking them all.
They're taking all the coupons. Yeah, but it's, again, living under their means. They're finding coupons or buying things with coupons.
Yeah. That is surprising.
Unbelievably surprising. And then let's go to the next slide here. Okay, so here's just their monthly clothing expenditures. So basically where the monthly clothing expenditures, as you may imagine by this point, is as close to zero as possible. So the most amount so the highest bar is 29% of them spend between $0 to $49 on clothing. So that's the majority of them. Then 24% spend between $50 to $100 on clothing. And then 23% spend between $100 and $49 on clothing every month. By the way, the average American spends on apparel is $170 every month. Which,
so that's in the 3%.
Yeah, that's actually 3%. So actually, let's do
3% of millionaires spend as much as the average American does on apparel.
Yeah, wait, let's actually do the math to see what percentage is under that. So I said 170. Don't worry, guys, it's well worth our time. If you do 29% plus 24% plus 23%. So 76% of millionaires spend below $170. The average American is spending $170 on clothing.
Wow, that is, it's they're not following the right playbook there.
Well, living below the means, right? You think, oh, I need to have the nice clothing and all that. Nobody cares about your clothing. It's literally what millionaires say. They're like, give me a T-shirt from Walmart, some jeans, I'm good to go. Right? They're under their means again. Like every single aspect, they're under their means.
Yeah. Same thing. Social media, back to it, right?
Yeah. Like get the nice brands, the
designer stuff.
Designers. Oh my gosh.
The clothes, the cars, the house, it's literally all the opposite of what the millionaire actually does.
The exact opposite.
Yeah.
It's literally, it's pretty amazing. Let's go to this next stat here. 79% of millionaires did not receive any inheritance at all from their parents or other family members. Right? There's the big thing, people inherit the money.
Yeah.
Not true. Not true at all. 79% of them did not receive anything. So maybe 20% received a little bit. We'll get into those stats in a couple slides, but they're not receiving inheritance.
This is a bit of an inspiring point. Right?
Yeah.
The discipline can get you there.
You don't need a big inheritance. You don't need any inheritance. Most of them don't have any.
Yeah.
It's literally you today can do this. You just got to be disciplined. If we go to the next slide, 1 in 5 received some inheritance, or 20% received a small inheritance or some inheritance, and 3% received an inheritance of $1 million or more. Right. So only 3% of the millionaires inherited the millionaire status.
It's like Donald Trump, small loan of $1 million. Only 3%.
Only 3% of the people did that. All of these millionaires are self-made.
Yeah.
Is basically what they didn't inherit their money. They made it themselves with discipline, living under their means, putting their money out of expenses into investments.
That tells us it is achievable.
They didn't need to pick the top stock either.
Right.
Also very achievable. You don't have to pick the top stock. It's called the S&P 500.
Mm-hmm.
Well, a little bit more risk. It's called Qs, and you can go down the risk curve and go for it. Diversify, obviously. Mm-hmm. You don't need number one stock. You don't need to pick the next Apple, Microsoft. Don't need to do it. You
just follow what the millionaires are doing.
Exactly. Now let's go to this next one. Also, maybe some inspiration here. Only 8 out of 10 or 80% of the millionaires came from families at or below the middle income level.
Yeah, wow.
So 80% of them were at the middle income, like when they grew up, right? They're not growing up from rich parents. 80% of them were from middle income or lower. So that's lower middle class to lower middle class. 80% of them were lower middle class, lower class, or middle class. So what that basically means was the household that they grew up in was making $80,000 a year.
Same thing then with the inheritance, right? Like,
yeah, exactly.
It wasn't just handed to them.
It was not handed to them at all. It was, they grinded their entire life, and then at 49, because they're grinding, they're now a millionaire. And that's how.
Yeah, and I think it makes sense because, like, if it was handed to you, you just get, like, a free few $1,000,000. You don't know what it took to get it, so you're not really going to know what it takes to keep it.
To keep it, right? And you're gonna piss it all away, or you're gonna do whatever with it.
Yeah.
And you're gonna live above your means. You're gonna live like the social media people live.
Right.
Spend all your money, live above your means, and you're probably gonna lose your millionaire status or just not do anything.
Right. Because you don't have respect for it.
Exactly. Right. You don't know what it took, like you're saying, to get there.
Yeah.
And the grind your parents probably went through to get to that status.
Right.
And then so the next slide is only 2% of millionaires came from the upper income families. It's only 2% of them, right? Just like only 3% of them, of the millionaires inherited it. Only 2% came from upper income families.
Adds up.
All right, and if we go to the next slide, this puts the entire distribution onto a nice little bar graph. So, 4% of millionaires were in the lower class. This is when they grew up, in childhood. They grew up in the lower class. 27% grew up in the lower to middle class. 48% grew up in the middle class. 19% grew up in the upper middle class, and then 2% were in the upper class.
It's interesting. It slightly leans towards lower class. You see, lower middle class is
Yeah.
higher than upper middle class, and
Yeah, the biggest is the middle class.
Yeah.
48% of them are from the middle class, which again that means the family in today's standards made less than $80,000, right? So that's what middle class is. So that's for 48% of them were, and then the next 27, next 30% of them were below that, right? And so again, 39. I mean, I think the numbers really speak for themselves. 80% were in that middle class or lower bracket.
Yep. I mean,
what
else can be said about it? You know?
I don't think anything. Like, it's literally just freaking grind. Yeah. You're going to be a millionaire, and you'll be okay.
It is possible. It's possible for everyone.
Here's the next one. So now we're getting to education. So 88% of millionaires graduated from college. So 88% of them, they do have a degree.
No surprise.
Yep.
I don't think.
I don't think so either. If we go to the next slide, this shows like what degrees or types of degrees that they had. Only 13% of them were PhDs. All right, 38% had a graduate level degree, and 36% of them had a 4-year college degree. Right, and so that's how you get towards that 88% of millionaires graduated from college. Okay, only 3% of them had a 2-year college degree. Only 8% of them had some or no degree, and only 2% of them had a high school or GED.
Okay, so suggests you need some education.
Yeah, well, I think this says a couple things. One is education is important.
Yep.
I think the second one is, remember the student loan chart. Only 2% of them had student loans.
Right, so that they're all going to school.
They're going to school, and they're all getting student loans at the beginning of their life, and then they're paying that thing off immediately.
Yeah. Right?
That's how they did it. They went to school, they got their job, and then they grew in their job, grinded their job, and then as they're grinding that in their younger ages, they're paying off all their student loans, and that affords them the opportunity in life to then invest their money elsewhere.
Right.
So they're focusing all of their time on their job, growing their income or like the job. They're not really trying to pick the next Microsoft or anything, touching their portfolios. They're not doing any of that.
Yeah.
It's just they're just focused on the savings aspect and
time in the market.
Time in the market. So thought that was pretty cool. In terms of top 10 degrees earned by millionaires, this is in alphabetical order. I think I have, the next one will be in like the actual degrees, I think. We'll see. Anyway, top 10 degrees. So this shouldn't be a surprise either. 60% of the degrees were business or STEM degrees.
Accounting, business, finance, economics. I see that.
Yeah, so I'll read them off. It's accounting, biology. So this is the top 10 degrees. Accounting, biology, business administration, computer science, economics, education, engineering, finance, political science, psychology. So 60% of those are business or engineering, STEM type of degrees.
Yeah, yeah.
Then the interesting ones are the ones that are not. Education. Okay, education. Like a teacher does not make a lot of money.
Right.
Education, political science, psychology.
That's it.
And that's it.
I wonder if psychology, I mean, that's not really STEM.
No, I don't think that's STEM. So those are the ones that were not in that business or STEM category.
Yeah.
Which is pretty. But that, I think, and then this next one is really going to shock you. Okay, so teachers. So when they interviewed 10,000, more of them were teachers. So teachers were more likely to become millionaires than attorneys or business professionals, and were behind only engineers and accountants in the millionaire count.
How is that? Does it go into any more detail? Or is it their income, or is
no? Teachers don't make a lot of income.
So that must mean they're just following the principles here, right?
They're literally just following the principles.
Yeah.
And you can look up what a teacher makes. Like, let's go average.
Quick Google search.
Yeah, let's do that. Quick average salary.
I feel like it's
for a high school, or do a high school.
High school, yeah.
High school teacher. 57,000 per year is what a teacher's making. Right? So what that's just telling you.
So somewhere around average American income, I guess.
That's below an average income.
The average was 80, right?
That was for middle class. So they're lower. They're probably in that lower middle class is the teacher.
Yeah.
That's most likely what they are. They're literally just following all these principles.
Yeah.
It's like they don't have a large salary, so they have to be tight on the budget. They're tight on the budget, and the way that they're living is allowing them to get to millionaire status because they're so tight. And the fact that they're making the way an accountant makes, it's probably double what a teacher makes. Right. And there's more teacher millionaires than lawyers.
Wow. Because the teachers...
I don't know if I said that right.
It was...
So teachers, there's more teacher millionaires than lawyers. A lawyer probably makes more than double to double what a teacher makes.
Definitely, yeah.
That's...
Just goes to show, again, like, anyone can get there.
It has nothing to do with the salary.
Right.
It's nothing. A bigger salary does help, but it has way more to do with the discipline of a person than the salary of a person.
Salary, degree, like, they matter. But as long as you do what the millionaires have done, pay off your student debt.
Yep.
Don't go get a fancy car. Don't eat out every single night.
Yep.
Don't carry over credit card balance, and invest as much money as you can. The teachers outpace the accountants or the lawyers. It was.
Yeah, I almost feel like this is like a discipline. So like engineers, accountants, and teachers are the most disciplined.
Yeah, that's what it's showing.
I mean, like an accountant too doesn't make like crazy salaries. They make a good living. They're probably middle class, right? An engineer is probably on the upper middle class.
Yeah.
Type of spectrum. Management is also probably that middle class to upper middle class, and attorney is like upper class to upper middle class. So again, it's you can do this. You can do this. Let's go to the next one. 62% graduated from public state schools, and only 8% went to prestigious private schools. So the whole I had to go to Harvard to become a millionaire, not true.
Yeah.
These millionaires are going to like, I don't know, Texas State, Arizona State, or whatever. Maybe not Arizona State.
SUNY schools, maybe.
Yeah, SUNY schools. But what does that tell you? That like when they went to college, they did take on student loan debt, but they didn't take on.
They didn't take on a ton of it.
A
They
ton
went
of
to a
it.
public state school.
Right.
And that helped them.
And that helped them not have to pay down as much.
Yeah.
And then they got a job just like everybody else gets a job. Well, not everybody gets a job, but they got a job.
Right.
Right? And then they just used what they got, and then they were able to make do with it.
Yeah. That's a good one. I think it's definitely part of the strategy.
Yeah.
Right?
Yeah, exactly. Well, because, I mean, a private school can cost $100,000. Well,
these days, like 4-year tuition could be over $200K for a lot of private schools.
Oh, for a full 4 years or just 1 year?
Full 4 years.
Okay,
not just 1
year. When I was in school, I did do a private school. It was $72,000 a year.
Yeah.
So like a $72,000 every year. A public school probably paid $72,000 for the
whole thing, maybe.
The whole thing,
yeah,
maybe.
Basically,
they were doing in public school, it was like $25,000 to $30,000 for a public state school.
Yeah, it's around that per year.
Yeah, and so mine was $72,000. So basically, what it's saying is that like those big private schools, like they're not.
It's gonna
make you a millionaire. It's gonna cost you a lot more, and good luck paying off that debt.
Yep.
It's really hard. And then only 52% of them earned a master's or doctoral degree. So
okay, 50-50.
Yeah, 50-50 on that. I think the way bigger stat is they graduated from college.
Mm-hmm. Mm-hmm.
They graduated. That's what happened. Next one is only 15% of millionaires were in senior leadership roles. So that means a vice president or C-suite, like a CEO, CFO, COO. So what that says is like, again, people are like, oh, I need to like get promotion. I need to become vice president, and then I'll be a millionaire once I'm the vice president. It's like, no.
Right. They probably see that as very distant too, like impossible almost.
Yeah.
It's like it's not encouraging.
Yeah, and I'll never be a millionaire because I couldn't become a C-suite or a vice president or anything.
Yeah.
And it's like, well, no, actually, the millionaires aren't those people. Like
85%
literally,
is not them.
Exactly. Literally, find the most disciplined person in your office. That person's probably going to be the millionaire or is already the millionaire, depending on their age.
Yeah, regardless of what their position is.
Right.
You know?
I bet you could go like, what do people eat for lunch, right? Who are the people eating it, like not going out for lunch?
Yeah.
And who are the people going out for lunch, and who are the people eating in for lunch or bringing a sandwich or something? I bet you that is a better indicator for who's going to be a millionaire than it is their title.
Yeah, I think you're right. Every sandwich adds to the investment portfolio, right? Sandwich that you bring from home.
Well, it's that, and it's more just like the discipline of eating and packing a sandwich, eating that sandwich, and not going out when everybody else is going out.
Yeah.
It takes a lot of discipline.
For sure.
So like that's just a characteristic of a disciplined person.
Yeah, and we see that's what the millionaires have.
Yeah. So go out, find those PB&Js. I love PB&Js, man. I do double side on peanut butter, by the way.
That's a little excessive.
No, it's not excessive. It's fantastic. Double side peanut butter, jelly in the middle.
That's heavy.
Way too much jelly, too, by the way. But,
okay, I really like that, though.
My thought process is like I need.
It's a whole meal, right?
I need nutrients.
Yeah, no, I understand.
But then also, my jelly doesn't seep through the bread.
Okay.
Because peanut butter is keeping it in.
Oh, okay. That's a good idea.
I got no seepage on my peanut butter.
All right, so you know what you're doing with the.
I think I know what I'm doing, or my parents knew what they were doing. Somebody knew what they were doing. Probably not me. All right, next on the list. 93% of millionaires said they got their wealth because they worked, not because of big salaries. This is everything we've been saying. They're saying 93% of them are like, I just worked.
It's the grind.
I literally just worked.
Yeah.
They grinded it out. They were like, yeah, I had this massive salary and that afforded me this chance to be a millionaire. Like, no, just worked, man.
Yeah, same thing as the C-suite stat, basically.
Exactly. Yeah. Exactly. They're just working people.
Right.
Here's pretty cool on that stat too. 31% of the millionaires averaged over the course of their career $100,000 in salary. Okay. And 33% never made over 100,000. So what does that tell you? So 33% are below 100,000 over their entire career, and another 31% are at the 100,000 mark. So that's 66% of the people were at 100 made at 100,000 or below $100,000.
Yeah.
That's majority of them are not.
That's surprising, you know.
But that's what the middle incomes, the average.
Oh, true. Yeah.
Average income is about $80,000 a household.
Right. Everyone wants the six-figure salary, but you don't need it to be a millionaire.
Right. It doesn't make those people with those salaries. That doesn't mean they're a millionaire or that they're going to be better off or anything. It doesn't tell you that. It all goes back to the disciplined people.
Yeah.
So yeah, and it's also pretty nice to know that like you can live off the average salary and become the millionaire, right?
No,
like literally go through the steps. Make your expense line as low as possible. So cut the credit card debt, right? Like if you have credit card debt, cut that out first. Then go to either car payment or student loans. Cut that out first or second. Then you go, so let's say you cut the car payment second.
Yep.
Then you go, do you have student loans? Okay, yes, I have student loans. Cut the student loans. Do those three things first. Then you can really start to invest a lot more, right? Because that's also going to create discipline too in the person. The person that's putting their salary towards that and cutting it down every single month is creating a disciplined nature in you. Yeah. Right, and that's what's going to fortify you to then go out, and then after you do all that, okay, now I have a lot more coming in every month because it's not going towards inspections.
Yeah.
Now you need the discipline to take that money, not go out and get a new car, but go out and put it in, I don't know, the S&P 500 or whatever you decide to put it in.
Yeah, it's like you're saying basically you can build up that discipline by paying off your debt, and then once you have the discipline, apply it to your investing.
And then apply it to your investments, and then that will allow you.
Yeah.
And that will allow you to do it, right? So it's that compounding. I did an episode on compounding, so people can see that. And then it's also that one was good. I enjoyed that one.
It was the Albert Einstein quote, right?
That was Albert Einstein.
One of the wonders of the universe is compounding.
Yeah, exactly. And then you cut. Yeah, didn't know where I was going with that. it went through me. I think I have one more stat. Oh, should put this one up higher. 85.
This is a good one.
85% of millionaires rely on a grocery list.
I didn't get that at first, but I think I get it. I think it's saying they come in saying this is what I need, and they get what they need.
Yes.
As opposed to like going in and getting whatever they want.
Literally.
Don't go shopping hungry.
Literally.
Yeah.
Literally. That's exactly what it is. I'm shocked that they use a grocery list, but it's exactly that. I need these items. I go in and I get these items.
Yeah. Does it say what they use, like an app or paper? Maybe we should get some insight on that.
Maybe. Wait, I can look it up. I don't think it's worth it, but
that's the secret.
But yeah, but again, it's like
discipline.
It's right? Literally all discipline.
Yeah.
Right? Like they're just like, okay, I got this is what I need, this is what I get. I'm not really going outside of that.
Yep.
Is what it is. Don't know what to tell you. This is our list, and
that should be how it's done. Right?
Yep. It's also like they're so in tune with what their expenses are that they're going down to the level of what am I buying for groceries? Right? That's how in tune they are with their expense line. Like they know every expense. Like it's literally like, so like you want, if I don't know, people wanted to like get on this track. First thing you do, go to your, I don't know, credit card, debit card, wherever your expenses are, and literally list out every single one of them. Go on the internet, log into your bank account. What are your expenses? Map them all out. Start cutting.
Yeah.
Or like paying off or cutting, whatever it is, and then like get that number down, and then you're gonna just feel wealthier.
You know, no matter how much money, how many millions these people have, clearly they remain in touch with those expenses, outflows.
Yeah.
Every single one of them.
they're basically like frugal people.
Yeah, that's what it takes, I guess.
Yeah. So that's all the stats I have.
Well, that was a great review of what it takes to be a millionaire, based on the millionaires themselves.
Based on the 10,000 millionaires themselves. I maybe I do want to leave with the one stat is 0 of the 10,000 millionaires said that single stock investing was a big factor in their financial success. 0 of them said that. Okay, you don't like. It's really funny. We have so many conferences, right? And like all the people come like, well, what is the secret to success? And they literally won't write anything until somebody says, I have the next big idea for you. This one is going to be the big hitter. And they all you can hear all the pens do the little click. They all start writing. And, and the last one was a cannabis long, our latest one. And that's when I heard the most people writing. And it's like, literally,
they want that penny stock.
They want that penny stock. They want the big hitter item. And it's like, well, that is literally just not, you missed it completely.
0 out of 10,000.
0 out of 10,000 said single stock investing. So literally, just go, get invested. And then where we come in at Hedgeye, right, is we've done the math on drawdowns, and drawdowns can also help. So I think what this part of the study doesn't show is, okay, investing, it doesn't matter like the single stock, they're in like indexes or whatever, but also you can make money by not drawing down your income or your investments, right? So if you have an investment of 40,000 and it goes down by 20%, you're going to be much better off if you only drew down 10% versus the 20%.
Yeah, and that's especially relevant for like index funds that have like broader exposure, because then that's a function of the macro environment, and that's what we do.
And that's what we specialize in. Yeah. So that's the part where we're going to continue to help everybody on, and hope you guys enjoyed this episode. We'll be back at it in 2 weeks. You can catch us on anything. Hedgeye Podcast, you just put that into Spotify. We're on YouTube, Hedgeye TV. We have Twitter handles. I'm Hedgeye AI.
I think Apple
Twitter.
Music too.
I think we are on Apple Music. What's your Twitter handle?
At HE Digital Assets.
All right, so you can literally, we are on the Spotify. So watch us on the Spotifys or the YouTubes or the Hedgeye TVs. Thank you, everybody, and good luck out there.